Hi everyone, Jasper Basson here, founder of Drake Holdings and a financial director of Lead Optimizer. I'm sitting here once again with Heinrich. Hi Heinrich.
Good morning.
Thanks again for joining me. After the great success of the last tax talk, we thought good to do it again and maybe do it every two months.
Thank you, Jasper. It's really a privilege to be back onto your YouTube channel, and it's just a great way that we can just add value to the normal person out there starting a business that's got lots of questions, and that's why we're here to help the people. And I just want to mention where we are doing the filming today. We're sitting at a lovely guest house called B&B at 52 in Fishhoek, and as you can see behind us, we've got this lovely view with False Bay behind us. So enjoy the talk, but enjoy the views as well. Thanks, Jasper. So one of the questions that we received from the YouTube channel is there was a question regarding normal salary earners and what we can use as deductions. So me and Jasper took some time and we made a list of 4 or 5 things that we're going to talk about quickly. First thing, maybe medical expenses. Where does that fit into the normal taxpayer's tax return?
Yes.
Jasper?
Yeah, I think typically when an employee work for somebody, I mean that tax almost automatically get worked into the pay run and pay slip. But typically you get a medical tax credit per person that's on the medical aid, and for the most part, especially for the higher tax earners, that's in essence their biggest tax deduction or tax credit actually, because it's actually a tax amount that you receive back from your medical aid. Generally, when you have when you're on a high tax bracket, you tend to lose out on all the other cash expenses that you may incur because of your high tax bracket and the formula around that. But yeah, I think the biggest part to take note of is the medical tax credits that you can get.
Yeah.
I'm not sure if you maybe want to add something to that.
No, we've had a lot of questions lately with people that's got excess medical expenses. So like Jasper mentioned just now, there's a long formula that the receiver of revenue use, but there is a situation where you can get additional tax credits up to 25% of the additional medical expenses, but there's a long formula. But they say that those expenses have to be more than about 7.5% of your taxable income. So that's why the lower income earners normally start getting the benefits sooner than what high income earners
most definitely.
Get from the tax credits.
I think it's worthwhile because I do have a lot of those clients that do come through my desk is when clients or one of the family members on the medical aid do have a disability. So maybe you can just elaborate on that, maybe on what a real disability is regarding to claim back for as a tax expense.
Yeah. So with this medical, with the disabilities, the formula changes a bit with the medical tax credit. I think instead of getting a 25% tax credit, they move it up to a 33% tax credit. But the important thing when you're claiming on a medical disability is there's a special form that your doctor needs to complete. It's called the ITRDD, where they confirm the medical disability, and you cannot claim additional medical expenses if you haven't got that form completed. So I think that's the important thing. And another tip that I always give to my clients when it comes to medical expenses, if you have to pay medical expenses out of your pocket during the course of the year, remember to send those slips through to the medical aid, because what will happen is the receiver of revenue will look at what your medical aid certificate says and what your actual expenditure is, and if there's too big a difference, then you have to try and prove to the receiver of revenue why those are valid medical expenses, where if you send your medical slips, even if you know the medical aid is not paying it straight to the medical aid, they will automatically put it onto your tax certificate.
That's a very good tip. All the other expenses that you don't put through the medical aid, you actually need to, except for the receipt in the sense of the invoice, you also need to have the proof of payment. That's SARS tend to ask these days. They tend to ask the proof of payment as well.
Yeah.
I think if we can just touch quickly on the disability part again, but obviously I think it's important to understand that SARS have a prescribed list of disabilities, and it must be a severe disability. It can't be just merely a small disability. You need to the doctor also need to verify, like you're saying, that form that you need to complete, that by the way need to be completed every year. It must be a severe disability.
Yeah.
One of the other expenses that the salary earner may receive as a deduction would be a retirement annuity. Can you just briefly explain to us how that would work?
So again, the receiver of revenue just works according to a formula again. So they look at your taxable income or your gross retirement funding income, and according to that, they say that they will allow a 27.5% deduction for retirement contributions. So I think that's one area where that a lot of people overlook. And I think you can get a big tax benefit on that. If you do your retirement planning well, I really encourage the people to start saving towards that, because a lot of people realize it too late. They get to their mid-50s and all of a sudden they just realize they haven't made enough provision for one day when they want to, if they want to go on retirement one day.
I think if you're employed already and you have a pension fund that's get deducted from your salary, it's important to do that calculation with your accountant and potentially top up to that 27.5 or up to that 27.5%. One of the biggest claims generally for a salary earner would be a travel allowance, but it's very important, especially these days, the SARS audits, to keep the right supporting documents and also have your logbook correctly completed. So maybe if you can just give us a quick idea of what you need to keep to do your tax return.
So when it comes to travel claims, a lot of people do keep record of their kilometers, but sometimes they do it in the wrong way. The receiver of revenue is very strict with it these days, that they have to make sure that you stipulate in your logbook where you actually went to that day and what the reason was for the travel. So I think that's one area where a lot of people keep record, but they don't make the distinction about what was business and what was private. And if they do for business purposes, then people sometimes forget to say what the reason was for the travel. So that's also important. And the other thing that we've seen now over the past 2 years is the receiver of revenue is asking for the purchase agreements for the vehicles to verify that the price that we're putting onto the tax return, which is that price is the accurate price that we're using.
Yes, that's correct.